Boy, welcome, welcome. I haven't done this for a couple weeks, and all of a sudden I'm pushing all the wrong buttons.
Welcome back, buddy.
Yeah, good to be
everybody.
back. We've got not surprising numbers to me, but it's kind of it's very, the first 2 weeks never count, right? So I want to dive in and take a look at what we're seeing. But it's typical first of the year. Let's list our house. So now I want to go ahead and say, okay, we listed it. Are we still seeing price reductions? Are we still seeing contributions towards closing costs? All kinds of that stuff. And Bebop says, welcome back. Thank you. And doing Dan stuff. I need to go out and do some Dan stuff. Do some stuff. So, except complain about hospital food. But anyway, now that I was only expecting to be gone like a night.
Yeah.
So we're going to send you down here. Yeah, it was 8 days. And 12 hours in the holding area, sitting in a freaking chair.
Oh, man.
So I was pretty wiped out by the time. So please give me something. And they gave me chicken broth.
Oh Lord.
Yeah.
Anyway, look at this. This is my 7-day moving average. It's kind of gadooped right there because this is the holiday where everything went screwy. And then I didn't put any data in. All of a sudden I do. So everything goes up. But you can tell by this chart that the number of new contracts is still exceeding. The number of new listings is still exceeding the number of new contracts. I was encouraged when I saw that the number of new contracts is over 3,000. Because remember, we were kind of flatlining at around 2,750.
Yep.
So new contracts have gone up. And I thought, okay, are sales picking up? And the answer is yes. But so are new listings. So the market that we were in is going to remain the same as both numbers go up equally. Until one of those changes, we're still going to be in the same bucket of boredom. But it's not bad. Going up from 2,700 to 3,200, I believe it is on the difference down there on the bottom. Let's see. I'm waiting for it to scroll by here for you. So it's January didn't disappoint when it comes to people coming out and writing contracts. Active listings 24,431, and here you go. New contracts 3,223. So that's pretty decent. So all right, I got lots of good vibes coming here. I'll take that. So other than that, if I go back and I look at some of the stuff that says, okay, it's the second week of January, here we go. This is when it kind of starts getting fun because it makes predicting really easy. Whoops. Put this back up there. Add the stage. There we go. I'll just take last year and this year. There we are. These are listings under contract. We're right where we were last year. And it gets even quirkier when we look again at pending listings. Look at that again. God. Week after week, exactly the same. So we don't have a breakout.
Well, last year when we started, it felt like we had a good start to the year. And then we had the tariff talks. And then all of a sudden it just went and everything kind of came to a screeching halt again.
That was here. Yeah. So the active listings, they're rising above last year, not by much. Sitting here at 224 versus last year at 169. Not enough to rock anybody's world. I expect us to get about 28,000. I'd like to see that happen. I don't want to see it happen fast. Holy cow, the government's throwing so many ideas at us, none of which I have found and said, yes, let's do that. So I could do that. So if you guys don't mind, I've got an important phone call I have to make that's coming in. So I'm going to drop off for a second. So I'd like to hear in the audience to hear what you're seeing on boots on the ground. Okay. I'll be back.
Sure. Jessica, you want to go first?
Well, we talked about earlier today. I sent an email in our group email getting prepared for today. And I think it's really important to kind of tell the audience out there, if we're in a normal market, things that might be helpful to both buyers and or sellers to be thinking about right now and if we're going to experience what we did last year and everybody just sits on the fence and waits, versus making their actual momentum into purchasing a home or selling their home. So you guys want to talk about that for a little bit? On the buying side, Pat, you encouraged people last year, be ready when the interest rates settle in. Well, interest rates have been settled in now for last quarter. They're doing exactly what we expect. This first quarter, we don't expect any changes in the next few months. So if interest rates are going to stay around 6%, right? Let's talk about buyers. It's very.
And what's nice about that, though, is that I think I feel like we have stability in rates. We don't have anything going crazy that we worry about them jacking up or dropping down. It's like that stability is finally there. And at least I know with Ruby and I, we're feeling our buyers and our listings are moving. And I think that's because finally people are like, there's some stability. Last year, nobody knew what to do.
Yeah, I think it's a product of the last 5 years. I mean, I've talked about this last couple of times, last couple of sessions, whatever. But just pull back and look at the psychology of a typical buyer. The last 5 years, rates went down to 3, 2 7/8, 3. Then they spiked up, and they went from 3.5 to 5, 21, 22, and then 22 is basically everybody's like shock and awe. Rates going from 3.5 to 7. They sat in the high 6s, low 7s, 23, and then last 24 and 25, people were like, okay, I just can't be buying something at 7% when rates are at 7. We're going to sit, we're going to just wait and see. And then the last half of last year, from about May, June, rates have been the mid 6s. Now they've just been sitting, like you said, Jackie. I mean, it doesn't feel slow on our end. Sometimes people are waiting for the rates to go to 5, 5.5. But I think finally the last year and a half, I'm starting to see, feel phone calls. I'm sure you ladies and guys are, as far as people saying, hey, we've been waiting the last year or 2 years, and we need to do something now. Like I said, rates are not, it's nice to see them stable. Are they down to 5? Yeah, I'd love to see them, but a hope strategy is not a strategy. So, I mean, they're sitting 6, 6 and 8. They're probably going to see high 5s, maybe here and there. We see, it's kind of range bound. But like you said, it kind of gives people stability. They can make a decision. So I think it's drawing people out there finally like, okay, enough's enough. 6% is not the best rate, but maybe we do have to make a move.
I saw something come through from the MLS this week, or from Cromford, talking about days on market are going to change because when you put up a coming soon, it's going to go ahead and count as days on market.
It is?
Yeah. And they said that essentially it just kind of makes that number useless. So
there's no point in the coming soon then, I think.
Yeah. Kind of no point in the coming soon anyway, except, it was designed to say, I've still got some work to do on the house. Okay, let's list it as coming soon while you finish your painting. We'll just put up a couple photos, let people know. I think it got severely abused.
Yeah. But that was being used as a marketing tactic, was it?
Yeah, I mean, if it's done strategically, it's worked well in the past for us. I mean, we've even sold some in the coming soon. And even with buyers, when you're working with a buyer, sometimes it's nice to be able to say, okay, there is something else coming. And so you don't feel so much pressure if you've got somebody looking at a particular area.
The price changes. People are not, they're cutting them, but they're not at last year. Last year, we're in the middle zone here. See the high part right there? So they are reducing their prices, but not at the rate that they were last year. So, and then we have closing costs with seller pay concessions. That's still hanging at 53%. So that's still quite active. If you're listing, are you finding that your sellers, in order to compete, are contributing towards closing costs?
Yep.
Some are.
And we're pricing it that way.
You're pricing and anticipating that.
Exactly. If they don't ask for something, whether it be a price reduction or closing costs, unless it was under market value, which is a great strategy too, because then you secure multiple offers.
We've been
New
trying to price
construction,
ours.
did any new construction companies come out in the past 2 weeks and go, oh man, you thought we were on fire last year. Wait till you see this year.
It's slowed down what I'm getting from the builders right now.
Yeah, I feel like I'm getting kind of a wait and see from them.
Now, we did have one where we were trying to negotiate a heck of a deal at the end of the year, and we were lucky because the builder still gave them the same deal in the second week of January, and it was one for one of our viewers. And I was surprised that we were able to get that, but the rep there really worked hard trying to get that for them. So
That's great. And I was only off a few days, but yeah, this team that we have here was built by accident. So now we're just a full-fledged referral team, and it goes. I just make a phone call and you guys are up. But it's nice to be able to make a phone call and say, hey, can you handle this in the West Valley, Jackie, or Ruby, and the East Valley with Jessica? And then I always tout, Jackie, how much experience you got. And I did a little searching here and looked at your profile and your history. I did not know you were selling homes during the Civil War era.
hey, God.
Was she cute or what?
Oh my God.
Oh my
She did it the old-fashioned way.
You cracked me up, Rick.
When you say you want an agent that's got some experience, there you go. So, and even when people are back there, hanging out in the army tent, she's out there selling them. So that works.
It feels like it.
Jessica, you've been kind of busy. Tell me what's going on in your world.
Yeah, absolutely. Well, I live in a zip code where there's a heavy 55 plus population. Farnsworth built, I think he's on his fifth subdivision of Summerlin Springs Village. So over the last 20 years, I've relocated family, friends into that community. So I spent the last 3 weekends doing open houses in Summerlin Springs Village. And I'll tell you what, it doesn't matter whether it's Wednesday, Friday, Saturday, you hold an open house, and when you say, are the Canadians coming back, or the snowbirds coming back, they absolutely are back, and they're in every open house. So activity's been great. I will say, confidence wise, as far as buyers moving forward, the offers that we're seeing they're pretty aggressive, but why not? An offer is an offer. That's one thing I want to tell sellers right now is if you've got your house on the market and you've got showings, you've got offers, take them seriously, because the buyers that are out there are motivated. And, if it's something you're willing to accept, you're probably going to take it to close.
Yeah, the over 55 communities. I know down at Sun Lakes, boy, there's a lot of open house signs. They are back at it now.
Thank God I'm not in that community yet.
And
Jessica, where's that?
Yeah.
Where's that community?
It's on Signal View and Baseline is the newest, but in the 60s, Farnsworth built Sunland in, I think, a Greenfield, so Mesa, and then East Mesa out by Williams Gateway.
I've heard of it. I just never really knew exactly where it was.
Yeah, it's right off of the 60 as you're heading towards Gold Canyon, Globe. Mountain Views, Superstition Mountain Views, Red Mountain Views, golf course. There's 3 executive golf courses on it. Beautiful. Anything from condos all the way up to 3,000 square foot, 3-car garage homes.
Yeah,
Wow.
Nice.
So, Pat, the president, well, first of all, the feds come on and they don't make a rate change. They don't announce it. They're going to wait. President comes out and says who he's going to appoint, and nothing budged. Not a smidge.
Yeah. I mean, it's been pretty much like that with this, it's been kind of, if you look back the last 6 months, once again, we don't get the fireworks that we had a year or 2 years ago with the economic news. The PPI comes out, came out today. The core PPI, producer price index came out. The actual numbers are 3.3. The forecast was 2.9. So, I mean, you saw, that is quite a big miss as far as that. So, I mean, I think this guy, we're moving in the right direction. I mean, like Jackie had said, rates are stable. So, they're not, are they, like, once again, people love to see them lower, but 6.25, you probably have some chances to get them high fives once in a while. But overall, things are just not budging. I think the new Fed chairman will be positive for the market. I think he's got a real pulse on what's going on. And I just see this rates trading in this tight range here going forward. I don't see anything that really just, stands out to say, hey, they're going to spike up or spike down. So they've been sitting pretty pat. Excuse the pun.
I was trying to add that to the stage, and I added my chart for some reason. So I'm gonna
I did see it just for a little bit of humor. I saw one. Hold on one second. Oh shoot, I don't know if I can find it. Saw one quote saying, if at first you don't succeed, maybe skydiving isn't right for you.
Oh, no. God.
That would be a true story.
Now, Jackie, last year you said that July, we would probably look back at that and see that was the bottom in sales.
That's what I said.
So I went back and looked, and so as I pulled Pat's charts off of here, and
I got a lot of hate mail over that.
well, you need to write them back and tell them they were wrong, because here
Really?
is July right here. See the red number?
Yeah.
It came in higher than the July. These are pending listings under contract. Came in higher last year, and they continued to stay higher all the way through the middle of September. October, they matched October, but then they stayed higher than last year the rest of the year. So
Wow.
it's safe to say that when you remove seasonality, that July was indeed the bottom of the market when it comes to sales activity. So everybody,
Good job.
so you'll be getting a big silver plaque in the mail, and maybe a price mortgage T-shirt.
There you go. Yeah,
I
I
don't
got
know.
some not so nice emails over that.
That's what makes it fun.
Yeah. And then I said it on Mike Zuber's, and he goes, "No, you're off a month. I'm calling August."
Well, both of you were right. He was right. He was more right in August, because they spiked up a little bit higher. January to January, there were, according to no one here, price cuts are the same. Yeah, so we're talking about volume, not prices.
Yeah.
Talking about the number of transactions. The prices, they continued to go down, and that's because of the gap between the two. So until that closes, we're going to see prices get some pressure on the downward side, and nothing explains it more simply than the 7-day moving average here, where you've got more new contracts and new listings. But when we talk about bottoming out in July, we're talking simply this black line right here, which is the number of new contracts. And I don't have this pivoted out by month here, but I think you probably came in right about here. That was July. And we just kind of stayed flat, slightly higher, and then holiday, and then back up to higher. So yes, prices did go down, but transactions did not. They bucked the season just a little bit. Bush didn't want prices to fall either. It doesn't matter. Worse is the best case. You can't, presidents are not going to control the price of housing. It's simply supply and demand. And what else we got here to comment? So homes are 40% overpriced in Phoenix at 6.2% mortgage rates. Just math. Well, it's just math, but we sold 3,220 of them this week using the math that they liked. You were right, Jackie. Shall we do a screen print on this, or?
No. And I think that's Chris. Thank you,
Yeah.
Chris.
If prices are still falling, how can you say July was at the bottom? Again, volume, transactions.
Yeah.
That's what we're concerned about as realtors. We like transactions. I don't care if prices are going up and down. I don't. It doesn't affect my wallet at all. Transactions do. If there's 4,000 transactions out there and I'm still an active realtor, I'm handling some of those transactions. If
Yeah.
there's all of us realtors out there and there's only 1,000 transactions, we're all getting a second job. So you can have low transactions and still have prices going up or prices coming down. It depends. It all depends on, you got transactions are here, new contracts are here. What does that mean? You have more new contracts than
Demand is higher.
more new listings than new contracts. So prices are not going to come down. That has to invert. That's what happened in 2021.
Well, it
And
just seems like we're
prices
just seeing
are more
overall.
important than volume. When you're measuring the market, you measure both.
Yeah.
Volume, prices will follow volume.
You know what's interesting though, and Ruby, I mean, chime in, because we've had listings that have just been sitting and they're selling. I mean, we're suddenly getting contracts on our listing. We had a listing when we list Lariat in July, I think.
Yeah, we went on the market in July.
And we just got a contract on that one. It's under contract. And we've had quite a few, even in that first time home buyer price point, the 400 range.
Yeah.
We've had some of those go. Your 22nd Street went. That just closed.
Yep. But that wasn't a first time home buyer price point.
No.
But it still went fast, especially considering that we were working around an Airbnb schedule. So
Yeah.
I'd like to know. Oh, I'm sorry.
What's that? No, it's
I'd like to know people that are buying in general. Are they? How can I? Are they people that have been sitting around for the last 6-12 months waiting, or are they new? Just coming into the market? Or are they saying, "Hey, we've been waiting"? Because I'm just sensing that once again, the last couple months, I'm getting calls from people like, "We've been waiting for the last year or two. We realize that rates we didn't like them at 7, 6, 6 and 8 are okay." It just seems like you're seeing people creep out of the market that maybe have been sitting around. I don't know if you get a sense of how many people like that.
Absolutely.
Well, I actually have some buyers that want to buy, but because of the interest rates and because they're a single person, they're just not in the market. They're not in the buying, like the price point. Like there's really nothing out there 360, 380 or below, for that single person out there looking to buy a house. It's really difficult.
I'm not expecting a wave of new buyers. I'm expecting a gradual increase. Just part of it, just seasonal. I'm expecting, like what you said, Pat. Some people are saying, "Okay, I'm just going to go ahead and jump back in," but I don't see 2026 being the year of prices going back up. I see us still being flat to maybe down 1.5%.
Yeah.
That's a guess. So I don't think it's going to be, pants on fire kind of market, but I think it's going to be a much easier market if you are out shopping, because nobody has to be in a hurry.
I have this one young man. I've actually known him. He's a referral from his grandma to me. I sold her a couple of houses. I've actually sold the houses, helped her buy, sell, whatever. So I've actually known him since he was about 2 years old. So he's been looking and he's very particular about what he wants because he has a junk hauling business and stuff. So he has some really nice vehicles that he races and stuff. So he wants a community without the HOA, this, that, and the other. But he kind of went quiet in November, and finally he messaged me back, responded to me on Facebook Messenger that he was just kind of probably waiting till March or April because he heard that the market's going to probably crash again. He's just going to wait for that to happen. And I said, wow, where are you? Where did you read this, or where did you get that information? I would love to do some reading on that, but I haven't heard back from him. So
Facebook. I got it off of Facebook.
So there's not
or
gonna be
YouTube.
Anything, Yeah. So, anyways, bless his heart. I'm sure we'll find him something once he sees after April that it's not crashing. So
if you look at our simple supply and demand chart here, and this is a Cromford index here, you can see why prices went flying up. See the red number? That's demand. Supply was clear down here in the basement. And right now we've got supply higher than demand. But demand is going up. Supply, as far as an index, has come down just 1 week. But the demand is kind of starting to creep up on the supply. Whether or not it's going to meet it or surpass it, and it's hard to tell. So let's see which.
I think that's a key. That's a key chart right there.
Yeah, this one says it all right there. So if you folks will, nope, this isn't the one I'm waiting for. So I get too many doctors.
Everybody wants to talk to you.
Yeah, I guess so. Everybody was, what's your social security number again? What's your date of birth?
Oh, God. Well, the biggest thing that we're going to see on interest rates is basically, the 10-year treasury has been, playing around, the 420, 25. But the biggest thing that's been coming down is the spread between the 10-year treasury and the 30-year fixed. So basically, the last 6 months, back in 22 and 23, if you pull up a chart, Rick, I'll show you. This is where rates were at 7. You're looking at 7, and this is the spread. This is like you said, the spread between a 10-year treasury and 30-year fix. This spread gets in this range, which it is right now. You're going to see, and that's where the pressure comes from. It comes from stability, of the rates. When they're very volatile, that's when you start getting the spreads between the 10-year treasury and the 30-year fixed bonds. That's where traders put that gap a lot higher because they just don't know where rates, the volatility, kind of like it's a risk factor.
Yeah.
So that has come down. If that comes down even further, rates could, they're saying rates could improve further without the 10-year treasury making too much of a move. So
aren't we close to normal? Because don't we normally run like 160 to 180 basis points difference? Oh, God, I'm knocking stuff apart.
Right
and
now,
then we were up to like 3.25, right?
Yeah,
above for the spread.
Yep, we were almost 3. This right here on that chart is around 2.75. Right now we're at about 1.82. So yeah, 1.6, 1.7 is the spread between the 10-year treasury and 30-year fix. So as rates kind of stabilize, it gives traders, you don't have to put in that risk premium on the 30-year fixed, the MBS market. So that's why rates have been kind of just sitting here, which is good.
Very good.
Once again, it's like Rick said, I don't see anything that jumps out to say rates are going to spike up or spike down. It's just going to be not a whole home market like you and I have been talking about, but Jessica and I said, hey, it's more of a stable market now. So,
ladies, who are you seeing out there as an average buyer?
For us, it's varying, really.
Yeah.
Right. We're seeing more of the lower end kind of come back to the market as far as listings moving and buyers, which, that was probably the deadest market there was. That anything that's like 8 and above has been fine. They're not bothered. But even that kind of step up range, 5 to 7, I've seen that pick up some. I don't know. What have you guys
seen? But the average buyers are couples. I would say the average buyers are married couples or 2 people. Like if you've got to be making about $120,000 a year, wouldn't you say, Pat? Right, about an average in order to buy a $500,000 house or
if you get the husband or wife that makes 40 or 50, and the other partner, the partner, husband or wife makes, if they got, the biggest thing is just the car payments. If they got relatively, the people I see are just, they say, hey, we've got no debt. Mm-hmm. That's the biggest thing.
I have a comment here that says, from David, only a realtor cares about volume. If prices fall 10% or more, not sure you can call last August the bottom. Here's what I'm going to repeat this again. Transactional volume precedes prices. So if we've got transactional volume right now at 3,200 every 7 days, and the number of new contracts exceeds that number, then you're not going to have any upward pricing pressure. But if all of a sudden we stay at that same level of new listings coming on, let's say it gets at 3,400, it stays there. But now the number of transactions starts to drop week after week after week, and that gap grows, what do you think's going to happen to prices, folks?
They're going down.
Going to go down. They're going to go down quick. It's a forward-looking indicator. It's a very important number for realtors to look at to get an idea of where the market is headed. And it's one that we look at and go, okay, where is transaction volume going? Right now, it seems to have hit a low in July, and it's starting to make its way back up. Whether or not the number of new contracts has followed that, it's remained about the same. So until those two separate, like we just showed you on that demand index, you're not going to get that, prices to fall 10% more. They could still fall, but if transaction volume follows the inventory that's coming on, there's no 10% drop.
I think what's confusing to people is that the prices follow it.
Yeah.
They're not ahead. They're following the bottom. So I think that's where people get confused, because the bottom of transactions could be in July, but you don't see the price dropping until maybe October.
Yeah, because the contract was written 30 to 45 days ago. So it's just one of many numbers that I like to watch. And to me, it just shows me, are we slowing down or are we speeding up?
Yeah.
And are we speeding up at enough of a pace to start absorbing some of this inventory out there? If we're speeding up and everybody else has got their pedal to the metal, then it's going to be a messy, muddy winter and spring. So, but spring's another indication. It's just one more thing to wait for. Well, I'm going to wait till spring. I heard this. I'm gonna wait till November. I heard this. We're going to get a new Fed chairman. Here's what I heard. So I think what you're seeing now, we're going to stay right here. Just going to stick around, get a new Fed chairman in May. Everybody's going to be sitting at that computer that next morning and go, wait, how come nothing changed?
Mm-hmm.
Well, I think that spoke loudly that we didn't see any changes in interest rates with the announcement of the new Fed, with the is it consumer or producer index came out. It's like everything just stays. And to me, that tells me it should just be a good, normal spring.
Yeah.
Yeah.
Which is always the height of our market.
There is a lot of news coming out every day, every week. That's just, everybody's waiting on pins and needles to see if something's going to change it dramatically, and nothing. I agree with you, Jackie. I look at the reaction of news when it comes out. The last couple of years, like I said, going back 2-3 years ago, if a CPI number came out, you saw bonds changing 50, 60, 70 basis points, on a given day. There were some crazy days in there. Now it's kind of, people are okay. All right, what's next? So, I like
the 72-hour rule. You get the headline, you go, I'm going to wait this out.
Yeah.
See what it looks like in 3 days.
Yeah.
Get back to me then.
Well, yeah, it seems like the news, it just kind of dissipates after 3 days. We go on to the next news story.
Yeah. Well, folks probably won't be here next week, but you never know. If so, we'll be back here probably Thursday-ish instead of Friday. So just bear with us as we bounce around a little bit. I'll be showing up. Hey, I got a video coming out. If you live in Gilbert, you need to watch this. I interviewed a guy out there who's been following the water prices closely in Gilbert, and it is a mess. And he goes into detail, and that's going to come out Sunday afternoon at 5:00. And I mean, just to give you an example, his water bill is over $1,000 a month.
Oh my gosh.
That is freaking nuts.
They're trying to find out why. And he goes into a lot of detail. He's been going to city council meetings, meeting with people, and he's not getting the answers he wants. They're hired outside consultants. It is a mess. One lady said she had a normal water bill, which was $900 a month, which how many swimming pools do you have to have a normal water bill of $900? She got a bill for $3,400.
That is insane. And how is that not going to affect values in Gilbert?
It is. It's going to pound them to death. So, watch this.
Scary.
We're going to revisit that. You got to watch it closely. It doesn't have anything to do with data centers because there are no data centers being built in Gilbert. They alluded to Colorado River shortage. But here in the valley, the majority of our water comes from aquifers, not the Colorado River. So
Right.
it can't be that. It can be to a certain extent to go up, but not, 125% for your water bill. So
That's only it's going
tune
up
into
even
that.
more, like 400-600%. I mean, my God.
Yeah.
I mean, I got to believe
I
that.
think
I
it's
mean,
price gouging. We're price
I was.
gouging.
You think it's what?
Price gouging.
Oh, yeah.
Well, if it continues, Gilbert's in trouble. Gilbert will be in trouble. No one says this is the most demand to supply metrics since great financial crisis, full unemployment at record high stocks. Imagine how that ends. It's not going to end until I get rich, David. I mean, look, we can agree to disagree, but it's when no, I didn't buy a whole bunch of gold when I should have. So between the water and the crime, Gilbert is a mess. They're having a tough time down there. It's and I like Gilbert, so it's going to be that it has to be fixed. They can't just leave it where it is and say, well, hey guys.
It doesn't seem like they're getting any answers from anybody.
Doesn't seem to be, but he's forming a community of people that are taking a deep dive into it and meeting with the city. So, they're not taking it with their hands. A smart guy. He presented a bunch of charts and things that he tracks. He's from Intel, laid off from Intel, but so we're going to revisit it again. And but be sure and tune in Sunday night. I think you'll find that interesting. And you go, wow, when he tosses some of the numbers at you. Until
That's
then,
gonna be a good show.
everybody have a fabulous weekend. All right.
Okay.
Take care.
Bye.
Take care.
Bye.